Ethereum whales just staked 87% of their holdings. Bitcoin ETFs just pulled in over $1 billion in a week. And there's a date on the calendar that could shake up the entire crypto market. If you skip this video, you're gonna be the last one to know. First up, Ethereum. Tom Lee's company, BITMINE, just staked 87% of its entire Ethereum stack. That's not a bet, that's a statement. And they didn't stop there. They bought more Ethereum and added to their stock buyback, basically betting on themselves twice. Here's why this matters. Staking locks up supply. Less ETH floating around means less selling pressure. So while everyone's watching Bitcoin, Ethereum might be quietly loading the spring. Now Bitcoin, steady above 64K, but stalling right at 65K, and holder selling risk is creeping up. Translation: some early holders might be getting itchy fingers, but plot twist, Bitcoin and Ethereum ETFs just pulled in $1.1 billion. Best week since April, and get this, BlackRock alone was responsible for 80% of that money. Meanwhile, weirdly, the first ever US spot Bitcoin ETF is actually shutting down because investors are chasing AI stocks instead. Wild, right? Big inflows and a shutdown in the same week. Oh, and Bitwise's Matt Hugin says trillions of institutional dollars are still coming, so maybe this stall is just Bitcoin catching its breath. XRP got not one but two headlines literally titled Important Ripple News, back-to-back days. Ripple's PR team is clearly not sleeping, but here's the actual substance. New XRP ledger upgrades are targeting $530 million in tokenized Wall Street assets. That's XRP pushing into real-world asset tokenization, which is a much bigger deal than any price meme. Speaking of memes, some headlines are floating a $10 XRP price target. Cute. Take that with a grain of salt the size of a boulder. Okay, Cardano might have had the sneakiest good week in all of crypto. 4 separate bullish headlines, whale buying, fueling a rally, a quote-unquote quiet bear market comeback that retail hasn't noticed yet, a 10% pump from launching inter-blockchain communication, finally letting Cardano talk to other blockchains, and a bullish technical signal that some analysts say could trigger a 200% move. 4 bullish stories, 1 asset, 1 week. That's not noise, that's a pattern. This next part is huge, and nobody's talking about it enough. Samsung, yes, the phone company, is reportedly becoming a major stablecoin distributor. BlackRock launched 2 tokenized money market funds just for stablecoin reserves. MasterCard is piloting stablecoin payment credentials, and Tether is expanding into Saudi Arabia, starting with real estate tokenization. Samsung, BlackRock, MasterCard, same week. That's not hype, that's infrastructure being built in plain sight. Congress is finally moving. The Senate kept the Clarity Act alive, and there's now an official vote scheduled for September 15th. One op-ed even called passing this bill a matter of national security. Write that date down. This could be one of the biggest regulatory catalysts of the year. An FBI agent got charged for stealing $1 million in crypto from Russia. Hardware wallet sales in Russia just doubled as new crypto rules approach. Michael Saylor's strategy sold more Bitcoin, down to 842,138 BTC, and he says AI helped them raise $15 billion. And even copper hit an all-time high, which matters because it's a macro signal for inflation and money flowing into risk assets like crypto. So here's what actually matters. Institutions are quietly buying while retail argues about price. Stablecoins are becoming real financial infrastructure. September 15th could move the entire market, and Cardano might be the most underrated setup in crypto right now. The headlines are loud, but the signal is quiet. Don't miss it. If this saved you 20 minutes of doom-scrolling crypto Twitter, smash that like button, subscribe for the next update, and let me know in the comments which story surprised you the most. Until next time, peace.